Our next conversation is about, financial management and where you put in your savings. So many people actually put in their savings through SACCOs. Savings and credit cooperative, because SACCO will give you money based on the amount of money that you've put in, and also because you are a community of people who are members of that SACCO, you co-guarantee one another. Now then the SACCOs put money in their own SACCO, but they also co-guarantee one another.
Yep.
It's called Cusco.
Yep.
Kumbe kimeumana huko Cusco. Where? Now, our next guest is going to help us unravel and understand these things, and then also understand the legal safeguards for the money that you have put in a SACCO. He is Ken Gichinga. He's an economist. Ken, good morning.
Good morning.
How are you?
I'm very well. Happy 1 month anniversary.
Thank you. You're a fixer. If you know it's a 1 month anniversary, you're a fixer for sure.
And he listens keenly.
Yeah.
That's it. He's a keen listener. Karibu sana.
Thank you so much.
Karibu sana. Our good girl Jano is offset for a bit. She'll be joining us in the conversation as we continue. She's handling 1-2-1-2. Say
moja mbili.
Moja mbili like this.
Absolutely.
Yeah. But you're here, Ken, so that you can also help us just understand what's going on. The issue, the conversation around Cusco has been there for a number of years. And there was investigation that was commenced by the Ministry of Cooperatives and MSMEs. And there was then what we saw, arrests and arraignment in court of the top officials and some board members of Cusco. And then there was the revelation of the impact that is having on individual SACCOs, when the SACCOs now started releasing their financial figures. And we are saying the kind of hit and how they are cushioning those hits. So you will let us understand, is our money safe in the SACCOs? But before we get there, let us see what the Cabinet Secretary for Cooperatives and MSMEs, Wycliffe Oparanya, had said when he talked about the investigations and how far they'd gone and the fate of the money that was lost.
We have already met the members of Cusco, and we have already pointed to them that they are unlikely to recover this money. And even if a recovery process is undertaken, it will take too long. So we have told them that in terms of accounting prudency, they make appropriate provision in the accounts, and we have given them, because some of them they were owed billions. So we have said, instead of making a provision in 1 year, they spread it over a period of time.
You saw, and I'm sure even that time when CS Oparanya spoke, you saw what he said. And he's saying we've been doing investigations, we've unearthed that there was a lot of stuff that was going on at Cusco, and the possibility of recovering all this money, it doesn't seem like we'll be able to recover all this money at the same time. Let's start from the very beginning. What is Cusco, and what's the relationship between Cusco, individual SACCOs, and the regulator?
Many thanks again for having me, Eric and Mariam. Indeed, this is a very bizarre development, and I think it's good to unpack the architecture of this situation. Many Kenyans are members of SACCOs. It's closer to people than the banking sector. Your next door neighbor is likely to be within a SACCO, much more likely than in a bank. So this is something that touches ordinary Monanchi. And there are typically two types of SACCOs. You have the deposit-taking and the non-deposit taking. You'll find more people in the deposit-taking SACCOs. So you remit your monthly deposits into the SACCO, and typically within a few months you're eligible to get a facility.
Right.
And that's the phase that most Kenyans are familiar with. That's your everyday phase. If that process works well, that SACCO will make a profit. It'll take Mariam's deposit and make a loan for Latif and make a profit. Typically, these profits then can be reinvested. And now these SACCOs have their union where they can put some of these deposits and profits into those unions. Now that's two layers detached. So most Kenyans are not familiar with that secondary layer where the profits and deposits are stored. And that's where the mismanagement has been happening. Quite bizarre. Withdrawals have been happening. I don't know how it's possible for billions to be withdrawn and really with very little explanation.
Right.
And I think that's what Kenyans are waking up to, a layer that is beyond their everyday layer of their ordinary SACCOs. And they were asking how much has our SACCOs lost? Obviously, each SACCOs has deposited different amounts, so the exposure is a bit different. Some will take a bigger hit than others. What the minister said in that clip you played, Eric, was in the end, nobody will lose money. But that's a very sort of very reassuring statement, and that's
in
why
the end nobody will lose money.
Right.
Okay.
Because Ken, 101, you start your first car job,
Yes.
and it's like, join a SACCO, join a SACCO. If you
Right.
know what's good for you, join a SACCO.
SACCO.
Safest place to put your money. And then fast forward a few years, you see Cusco. And you're like, okay, I don't know what Cusco is necessarily,
Right.
but it sounds dangerous. So from a individual saver perspective, I know there's a lot of tension. People are worried. Did my SACCO have its money in Cusco? Does that expose me to any risk? And can people, no. But it doesn't, help to calm people down unless there's a surety that they will not lose money. So how will people not lose money? What are the safeguards? Are they real, actually? That's the question. Or are we just hoping that people don't lose money?
That's a great question, Mariam. And that surety you're asking for is really anchored in the law and the regulations. There are a couple of laws that govern the SACCO industry. Number one, you have the SACCO, the SASRA, the one that establishes SASRA. It's called the SACCOs Act of 2008, the one that establishes SASRA, who is the regulator. This is the CBK for SACCOs. Then you have a couple
What
of...
is SASRA in full?
SASRA is the regulator. It stands for SACCO Society for... It's a long phrase.
Regulatory
Savings and
Authority.
something
Basically,
regulatory
it's
authority.
what
Yes.
CBK does for banks
Yes,
is what SASRA does
for SACCOs.
Exactly. It's the
Yeah.
policeman that cracks the whip if you don't meet certain targets. Again, as I said, there are two types of SACCOs. You have the credit, the deposit-taking SACCOs, the majority. Then you have the non-deposit taking SACCOs. You can't withdraw those deposits. So those are two different entities, two different business models. The first one operates almost like banks. You can have your deposits, you can have your loans, you can have facilities. The second one really are more credit lending, credit facilities, and you can't really withdraw. So there are two legislations that govern that. There are a couple of other peripheral legislations, such as the Finance Act 2021 that introduced excise taxes, but those are sort of on the periphery. So SASRA really is the authority.
Body. Okay.
There are about 5,000, about 4,000 of these SACCOs. The deposit taking about 300. So the mandate for SASRA is actually far bigger than CBK. CBK has to play with about 30, 40 banks. SASRA has to deal with about 4,000. So obviously capacity, again, is another issue. Do they have the requisite capacity? So in terms of those safeguards, those are the safeguards that are supposed to help SASRA help these entities determine the liquidity concerns so that you're never out of money. Because as I said, your deposits have been lent to somebody else. So there has to be something that's left in the reserves in the event that people want to withdraw, they can be able to withdraw. That's it's called the fractional reserve banking approach. So SASRA is meant to look at that. But again, capacity becomes an issue. As I said, you're looking at a much larger ambit, much larger than CBK. And the capacity, again, in most of these SACCOs is quite light in terms of governance, in terms of, it depends. You have the big ones that really run super professionally. And of course, you have the small ones. And it's good to say that the top 50 of them control about 3/4 of the industry. So if you really get the top 50 right, you've really...
Then you're shaping the industry.
You're shaping the industry. So in a sense, it shouldn't be as difficult as it is. If you get the top 50 right, you've secured about 75% of the industry. Now, I think capacity has been an issue because we're talking of illegal withdrawals. So it's, it sounds odd, that 6 billion.
What do you mean by capacity, though, Ken?
Well, as I said,
whose capacity? Capacity of SASRA?
First, the SACCOs amongst themselves,
right.
But more importantly, SASRA, in terms of being able to make sure the sector is liquid, make sure the sector is viable. Now, one of the challenges that has come up is the issue of provisioning. Anytime you make a loan and that loan does not come good, you have to make a provision for it. And the knee-jerk requirement in this type of crisis is that different SACCOs should make provisions for any bad loans that have been made. The problem when you do that, you can create a liquidity crisis because banks, SACCOs can end up using all their money
for provisioning,
and they don't have anything for their members. So I think in the spirit of the wisdom, they've said, let's try and stagger these things over the next few years, which I think is wisdom.
Okay.
You have to apply that. Otherwise, you can, sometimes when you apply these things to the letter, what they call IFRS 9, you can really get into situations where you have a liquidity crunch and even a run on a SACCO where everybody says, oh, wow, my SACCO is in problems, let me go and take out, which we've also seen in the banking sector. So I think there's a level of prudence. It's almost similar to what happened during COVID, where there was a crisis and you have to manage the industry, make sure nobody loses money, make sure liquidity, confidence is still there.
Right.
And I think that's why those arrests had to be very public to give people that sense of confidence. But definitely we are not, the industry is not where it needs to be in terms of really being world-class, if you like,
being ready
to be a bank.
Right.
Stepping back, right? So we know that SACCO is a savings and credit cooperative, which is member-driven. We join together, we form a
right.
form
Make a SACCO.
Make a SACCO. Right?
Right,
3,
So
4.
we put in money, and then from that pool, we are then able to take facilities out of it. And then the SACCO starts making money. That's those things. It's regulated by SASRA, which is a legal entity, which is taxpayer funded to regulate. Who's Cusco?
So Cusco is a union, is not a regulator. So SASRA is a regulator.
Right. What is a union? Is it a SACCO?
I would say it's more of
A SACCO of SACCOs.
A SACCO of SACCOs. That's it. So it's almost the way you have in the insurance industry, you have the reinsurance sector versus the regulator IRA. So this is the SACCOs. Actually, that's the best definition. The SACCOs of SACCOs, because they need to pull money somewhere. Because remember, also the members want returns, and as an individual SACCO, you might not have the muscle, maybe to pull off a real estate investment. But if you pull it together with other big SACCOs, you can be able to build a plaza, for example, buy a bigger asset. So that is the wisdom behind the SACCO.
So SACCOs put money in Cusco.
Correct.
And then what does Cusco do with that money?
They invest it. They invest it in various assets. They try to make returns for their members. Can
SACCOs borrow from Cusco?
They can't borrow from SACCO, but they also do have capital reserves sitting with the regulator, sitting with SASRA, and that should be their first line. If you're in a problem, the capital reserves should be your first line, but they can
Same way
access.
banks have with the CBK.
Absolutely.
Okay.
But they can definitely be able to. They are a corporate entity. The way you're an individual member and you have your rights, there are corporate members and they do have their rights in terms of maybe if their members require more liquidity, they can be able to borrow.
I'm asking these ones, just so granularly, so that we know how our SACCOs operate, right? So we are members of a SACCO, and we know we are trustees, and we know we elect those people who get into the trustee board, and those are the ones who report to us. Right? Every year they call an AGM, and all of us as members of a SACCO go for that AGM and we listen. How has this SACCO performed? Where is the money? Are we getting a dividend? Are we able to withdraw? All those kind of things. So if then SACCOs create a SACCO called Cusco, are those SACCOs doing the same with Cusco? Are they the ones who choose the leadership of Cusco? Are they called by Cusco for an AGM? Do they look at the statements of accounts for Cusco? Do they then see the health or unhealth status of Cusco?
Depending on their deposits, quote unquote, their shares, because the deposits really become your shareholding into Cusco, that becomes a shareholding of Cusco. So obviously you'll have the bigger SACCOs having a bigger say, in the sense that they have a bigger shareholding. So absolutely, they do operate like that. And what's the wisdom behind this? As I said, these smaller SACCOs have capacity issues. They don't have the best investment minds. They are membership driven, ordinary Mwananchi members. So they may not have your CFA, your banker, who has insights on stocks and bonds. But if they pool their resources together, they can be able to at least get an expert to tell them, put some of this in real estate, put some of this. So it's not just pulling money, but it's also the collective wisdom of where money should go. That's the ideal. It's very similar to retirement benefit schemes.
Right.
You'll find every entity has a retirement benefit scheme, a pension fund, but you'll find they put that money with a fund manager somewhere else, and that fund manager is the one who has all the expertise to be able. So you'll find at the SACCO level, it's more of administrative, but really in terms of the strategy, should we put our money in stocks versus bonds, it might not be at that level, and that's why you need to pull your resources. That has been the wisdom behind that. Yeah.
I think I have two questions, but I think maybe we can get through one before the break, and they're all to do with member exposure. You said it very clearly, so at an individual point shouldn't be an issue, but then there was like a red flag I had, which is sometimes we're not as stringent with the rules. So if SACCOs don't have enough, I think fractional revenue, could there be exposure on individual members' parts?
Well, each entity will definitely have a haircut because they're talking about a significant amount of money has been unaccounted for. And obviously the bigger institutions will have a bigger exposure. That said, each of these SACCOs also has within them a framework to make sure, even as they lend money to the union, they amongst themselves have enough to meet the liquidity needs for the members. So you might not feel it on the outright part in terms of you going and not getting your money back. I don't think you'll feel that. But in terms of maybe the returns you'll start getting
when it's time for dividends now.
Dividends time, I think that's when you'll be like, oh wow, I was expecting more, but this is much less. So it'll be felt a bit later down the cycle than now, which is not a bad problem to have, because the big crisis right now is when if people can't access their facilities.
It's for me, panic.
That's actually what triggers panic. But definitely when it comes to dividend season, definitely there'll be eyebrows will be raised there.
Right. There's also the question of the Cusco Housing Fund, where individual members now put their money in Cusco. Is there exposure for them?
That fund has been there for particular reasons. I think the identification there was that segment was a lucrative segment, even for the members, the housing fund. But again, what is emerging is perhaps people do not have the visibility on all the outcomes that would have come. And I think that's what's triggering the confusion in that particular sector. I think it was a good concept, because you'll find most of these entities, most Kenyans use SACCOs for about three things: real estate, agriculture, and probably trading. You'll find most Kenyans and fees, emergency things. You'll find most people, but on the business side, it tends to be in those three areas: either a real estate venture, farming, agriculture venture, or trading. Maybe you want to buy wares and to sell. So you'll find most of this funding tends to be structured, such as with the housing fund, to look at real estate. So it is an aspirational thing, but it definitely needs to be thought through in terms of the various clauses guiding it.
Okay. Yeah. And I think we'll come back to maybe a little more of the exposure, but the red flags and green flags when it comes to SACCOs, even unions of SACCOs. But there's also some feedback on YouTube regarding our conversation, as well as on TikTok. And of course, we want, of course, more information about the fraud. That's what people are asking about. And we'll definitely get into a little bit more of what exactly happened at Cusco as we figure out what are the red flags, green flags when it comes to operating a SACCO, joining a SACCO, when it's time to leave a SACCO, if there ever is a time.
Yeah, I mean, we are hosting Ken Gichinga, who's an economist, and we're talking about SACCO. Right? Is your money safe in a SACCO? What do you look out for? First, it's important to understand that whole structure, because many times you just think about, okay, so we have to come together and we've called ourselves what? Fixer SACCO. So we all put in money, and then, by the way, Mariam alichukua 3 million juzi na amelipa. So pia nani achukue. And we don't know, so how do we manage this SACCO? How do we govern this SACCO? Does this SACCO report to anybody or anyone? Beyond what we know, should this SACCO be licensed? Should it not? And that's where the regulation and the licensure comes in. And the questions also coming in, like Sakina is asking, if KBA is able to have oversight on banks, where was SASRA and why was it unable to have a proper oversight on Cusco? Yusuf is also asking questions on this. Questions on the recent fraud. Have you investigated about fraud and knowing exactly what questions should we be asking ourselves in this? This is a conversation that continues shortly. It's 7:30. Fixing the nation, one conversation at a time. How safe is your money in SACCO? Ken Gichinga is still with us here in the studio. He is an economist and he's educating us on safety and what to look out for when it comes to SACCOs. Let's understand the global structure of the Savings and Credit Society. It is regulated, okay? Number one. Number one, there is a law that regulates SACCOs. It's called what? The SACCOs Act of
2008.
2008. It creates a regulator called the SACCO SACCO Societies Regulatory Authority, SASRA. That regulator is the one that licenses all SACCOs, deposit-taking SACCOs or non-deposit-taking SACCOs. Not all SACCOs can take your money as deposits. So the ones that are non-deposit-taking, what do?
Well, they issue credit facilities, but the deposits cannot be withdrawn. So you can put in your money, but you cannot withdraw it like in a normal deposit-taking facility.
And the deposit-taking SACCO, you can put in money and you can withdraw your
absolutely.
deposits. Okay.
Just like in a bank.
So you need to understand, if you're a member of a SACCO, what's yours? Is it a deposit-taking SACCO or a non-deposit-taking SACCO? There are 76 deposit-taking SACCOs according to the SASRA, and I'm on the SASRA website, which also says there are 185 specified non-deposit-taking SACCOs. What is the mandate of SASRA? This is it. Their vision: financially inclusive, member-centric, and stable SACCO industry. You see, member-centric. Yeah? To regulate, supervise, and develop the SACCO industry through promotion of prudent practices to protect members' interests, enhance access to financial services, and foster financial stability. Basically, they're supposed to be here to make sure that, SACCOs are run properly. Integrity, we act with honesty and promote a culture of trust in the conduct of our business. Those are the core values of SASRA. SASRA regulates all of them. Cusco is a union of SACCOs. It's a SACCO of SACCOs. Right. Whereas now SACCOs decide to put money into Cusco. And then Cusco goes and invests that money and brings in the returns and distributes to the SACCOs according to how much they're put in.
Correct.
And then that money from that, when it comes to SACCOs, it then goes and it's taken to the members of the SACCO for their benefit. They can decide we are declaring a dividend, or an AGM can even decide no dividend this year, let's grow our, right?
Correct.
Okay. Sawa. So when money goes from my SACCO to Cusco, who decides that my money will go to Cusco?
It would be the administrators of your SACCO who make, first of all, a determination of the performance, the profit made, and how much is available to be reinvested with the Cusco.
Okay.
Yeah.
And those are the administrators, those are the officials also that we have elected.
Correct.
And those that we have employed.
Correct.
To work in the SACCO.
Correct.
So they are experts on these financial matters.
I would not say they are experts on matters financial. They tend to be more administrators.
Okay.
And they tend to be people who make sure that the administrative processes are followed. In one of the questions that you read from one of your listeners, they talked about KBA. Why can't they be like KBA? And it's interesting. That was an interesting question because KBA is a lobby for bankers. CBK is a regulator.
It's a regulator.
So CBK is the referee. KBA is the coach, if you have to use footballing terms.
Yeah.
Okay.
And that's the same relationship these SACCO societies work, where SASRA is the referee, but Cusco is almost like the coach. It's on your side.
Cusco is just, it's a club.
Correct.
That you put in money. I'm heading to somewhere with this question, which is when my SACCO has put money in to Cusco, who ensures financial probity?
Indeed, it is the administrators of your SACCO who should have full oversight into all the activities Cusco. And Cusco has mandatory reporting that is supposed to provide the SACCO members, the leadership, the administrators of your SACCO. So they need to go through the reportings. If you look at the charges that the DCI have preferred against the Cusco leadership, one of them is conspiracy to defraud, presenting false documents. So there is a possibility that even the SACCO leaders could have been misled by false documents.
Okay.
For example, somebody at Cusco issues a fake invoice. It's very hard for somebody at the SACCO level to say this was a genuine invoice. So there are also limitations that also, and these are the things that are being proposed to be strengthened, especially when big payments have to be made. What are the processes to be followed? So there are gaps, definitely.
But how do we close them? And I think it's a good place to pick up from. I've seen two questions here. One around auditing. That's Professor, who asks, Cusco was being audited for the past 10 years, I think probably since its inception, right? And including by the regulator. Cusco had professionals certified by ISPAC. You need professionals to execute this. So how did all this slip through the cracks? Again, might be hard for a SACCO official to be able to see those things, but an auditor should be able to see some of these gaps, no?
We've seen cases in the past where even auditors have been blindsided. If you think of Mumias, Mumias had a clean bill of health from its auditor when we knew things were not going very well. KQ had a clean bill of health from its auditors, and those matters were raised up much later. So even auditors, they can issue queries, but it's not foolproof. And that's why these processes need to be constantly reevaluated. It's not something you create a legislation 15 years ago and expect it to work in 2025.
Right.
We have cyber crimes that have come up over the last few years. You have much more intelligent defrauding techniques. So one of the things that SASRA should do is frequent review of policies. There's some old regulations that govern SACCOs, also like the Cooperatives Act, which is much older, much weaker, and that explains why you'll find some SACCOs are not regulated by SASRA. I know that was one of the questions one of your listeners was asking.
Let me actually just pose it to you so that Alex feels heard. If the SACCO isn't SASRA regulated, is it safe? I saw the list of regulated SACCOs of 2025, and the SACCO where I'm a member and it's a deposit-taking SACCO wasn't part of the list. How safe is my money? So one, maybe, how do SACCOs exist without being regulated by SASRA? And then how safe is Alex's money?
That's an incredible question, Mariam. And I think we should go back to the history of cooperative movement. Kenya has one of the largest cooperative movements. And some of these cooperatives, some of these SACCOs are from very humble backgrounds, deep in the rural parts of Kenya, where people have sat down around a table and they have pooled resources, and they've been able to educate children, they've been able to pay medical bills, they've been able to buy property. So it's such a deep part of the Kenyan psyche. It's almost part of the Harambee philosophy that's in there. So some of these cultures almost predate even some of this legislation. So you might find some of these have these very humble origins where many things are not even documented, people are not experts, but they worked still. And you'll find some of them have these legacy histories that have been there, and they've been there for a long time. And the fact that they have worked meant they gave people confidence that they can still work, even without these regulatory powers. But obviously, we're in a new age. We're in an age with new risks. Investment risks are quite huge. Credit risks are quite huge. So the mums and paps approach that could have worked 20, 30, 40 years ago, when the objectives were very simple. Let's pull in together, let's buy a shamba. Now have become much more sophisticated. You're now banking, you're taking deposits from this Gen Z who has far deeper aspirations. So the complexities have increased, and that's why SACCO was formed. You know, SACCO was formed in 2008. That's very recent, if you think about it, compared to how long the cooperative movement has been. So it tells you it's still, for an industry that's been, well, since independence, really, and a regulator that is less than 15 years, there's a lot of work. So I'm not surprised that not all these have entered, but I think SACCO's mandate at some point is to come up with a cutoff date and say times have changed. It's important now everybody plays with the same rules, has the same safeguards.
Okay.
Yeah.
Does the law allow anybody to hold money for other people if you're not regulated or licensed?
It doesn't.
So they operate illegally.
So you cannot be you cannot call yourself a SACCO if you're not licensed by SASRA.
So at the
long and short of it.
Okay, so at the banking level, absolutely, you cannot call yourself a bank
if you're not regulated by Central Bank of Kenya,
and you cannot be a deposit taking. At the SACCO level, as I said, we have some of these entities that predate legislation that have been operating, and I think possibly even out of political reasons, they could not just be done away with,
and they have to be regulated.
They have to be, and this is a push. They have to be now to be regulated. I think you see, the IMF and the World Bank gave some recommendations to Kenya about a couple of decades ago. It said it's important also some of these SACCOs eventually become banks.
That's how you grow.
Exactly, and I thought that was a very profound wisdom, because it's an aspirational sense. You can have good management, tell your members, if we practice good management, one day we can be a fully fledged commercial bank.
Okay, so one of the things that you expect out of SASRA when it was formed is look at those old ones and go and show them how to join the formal licensed SACCOs, right? Or just become licensed. You can go to sasra.go.ke and under that you'll find publications. If you just click under publications, you'll see the licensed and the licensed SACCOs. Licensed deposit taking SACCOs, like now there's this list of licensed and authorized SACCO societies in Kenya for the financial year ending 31st December 2025, and they publish them every year. This was published in January 27th this year. Last year, they published the ones for license for 2024, license for 2023, and so on and so forth if you go down. So if you'd like to know whether your SACCO is licensed, you can just go and find it. Is it on the list under sasra.go.ke. You talked about capacity. But sometimes this capacity story is an excuse for very many things, right? So for instance, if there's one entity called Cusco. Well, I know there are several others. It's not just Cusco that is a union of cooperatives. But if there's an entity called Cusco where SACCOs are putting in money, SASRA should have visibility into that. SASRA should know that then Cusco, you're supposed to report. This is how you're supposed to report. You're supposed to send us your reports. Let's also look at how well you're doing financially, how your systems are operating. They should have seen the red flags as the regulator. Again, the leadership of SACCOs should have seen the red flags as the people who have put money into these SACCOs. Again, we have a commissioner for cooperatives who should have seen the red flags. How did these red flags just become green to all these entities?
I think also the reporting of this scandal can be oversimplified. And especially when they use the word illegal withdrawals. You know, it gives the ordinary Kenyan the perception that somebody went to the account, removed money and put it
in a bag.
And it obviously now begs the question, how does that even work? But if you look at the DCI charges that have been presented, it presents a more cunning approach to fraud is people presenting false documents. I mean, even today, the national government is struggling with pending bills. And one of the things, they even set up a verification committee. And even then, it's very hard for them to say these are legitimate bills versus not, even with the whole committee. And that's at the national level with all the capacity that Treasury has. So how much less? So I think also the reporting of the story has been oversimplified. And I think that's why Kenyans are finding it a bit unusual. But if you look at the DCI charges, it's conspiracy to defraud, but it's presenting false documents and dealing with false documents. And Kenya, it's very easy to get fake documents to be able to discharge some of these things. I think once you look at it from that perspective, you appreciate the complexity.
Apana.
Why are you saying no?
If we are able to investigate now and find it, right? What's a regulator's job? To make sure that you're playing everything by the rules and by the book. And at the very least, you could say that something has happened. Kawanov could sleep. But over and over and over again until billions are lost, come on, Ken.
I mean, I'm not excusing the action. I'm just saying that I think sometimes it's very possible, especially if you look at even in the banking sector, some of the banks that went down in the last decade or so, the tracing was very complex. It was not just it was not very in your face type of fraud. And all I'm saying is without, again, going back to the issue of SASRA is dealing with about 5,000 entities, So I think for me, a big part should be, are we boosting the capacity? Yes, you're right, Eric, when you say sometimes capacity can be overused, can be abused. But it's true, if you really look at the numbers, even if you have one official at SASRA looking at one SACCO,
you'd need 4,000.
You'd need 4,000. I mean, that's enough to fill this whole building.
Right.
On a very modest
scale.
I
get what you mean. The capacity issue, we could argue about it, but I think from a regulatory perspective, then the question is, what more can we do? Fine, first of all, I always like to go back to the money. Where does SASRA get its funding from? That's a great place to start, so that we can see, where they're coming from, who pays the piper, how much they have to do this regulatory work. So who does fund SASRA?
Well, it's a state agency. It's regulated just like CBK.
Right.
It's part of the Treasury, Ministry of National Treasury. So it does have its allocation. If you want to get the exact amount, you'd have to go to the quarterly budget review to see exactly how much. And that's a good question, to see how much it's getting vis-a-vis
the work it's expected
the work
to do.
That's a type of question I think now policymakers need to be asking.
Right, because like 4,000 SACCOs is a lot. A lot of, I don't know the amount in total, like share deposit from members across, but it's in the billions, obviously. Something that could weaken an economy. But more so, if I am joining a SACCO, for example, and I'm not going to be the one to make the decision to join Cusco, but I will make the decision to join a SACCO. What are some of those green flags that I can look out for that can give me confidence that this SACCO is heading in the right direction? And potentially, should even something like this happen, the fractional revenue will be okay. Small things just to keep me, feeling safe.
No, that's a good question, Mariam. And even before I answer that, I'd like to make a policy proposal. Early on, I'd said about 50 of the top SACCOs contribute to about 75% of the industry performance. So one easy way of fixing this capacity issue is saying these top 50, can we have a special club for them? The KRA has large taxpayers, medium taxpayers, small. So only 50, if you get these 50 right, chances of getting an industry crisis is minimal. And we'll make it more rigorous, almost maybe like CBK level of rigor, but also they'll enjoy more benefits because where there's privilege, there has to be responsibility.
I like that. Okay.
So that also helps to your second question of how should I choose? So if that person was asking that question, they'll be able to say, okay, I'm with a tier 1 SACCO, I'm with a tier 2 SACCO, I'm with a tier 3. And even the banking sector have tier 1 banks, tier 2 banks, tier 3 banks. So if I'm choosing to work with the tier 3 SACCOs, I should be ready for maybe looser standards. But if I'm in a tier 1, I should be able to say the standards are almost, they keep saying a shilling in a SACCO should be as safe as a shilling in a bank. It should be at that level. So now, even now people have the choice. They say, you know what, me, I'll be in a tier 3 SACCO for my own personal reasons. And it's a risk I'm willing to take. And I think that information will sort out even the capacity issues you're talking about.
Right. But if I walk into the SACCO and I'm just shopping around, maybe it's the SACCO from where I work, it's the Nation SACCO, maybe it's a SACCO I got from my mom. What are those things that I should look out for? And I'm just like, yeah, that's a good idea. Or red flags as well, things that I see, whether I attend an AGM or, you know, a meeting or I'm handed papers and I'm like, maybe not be a good idea.
The best answer to that is what you've exactly said, looking at some of their filings in terms of the previous AGM, you know, what was the level of disclosures that were coming out? Do you have confidence? But you're right in saying, you know, your young Gen Z walking in might not have the time to go download
the papers and
the paperwork, and they may not even understand.
Even attending that AGM, it's a tall order.
And I think this is why they should create these tiers of tier 1, tier 2. Even at the bank, they have a sticker. They say we are a tier 1 SACCO. You know, it's a green flag.
Okay.
In fact, have the post in green. You're a tier 1 SACCO. So when somebody asks, what does a tier 1 SACCO mean? They say we are held to higher standards, blah, blah, blah. Or we are at tier 2, come up with a color. So it's very, even to somebody who's uneducated, somebody who doesn't know much about reading annual general meeting reports, but they see a red tier 3 poster. They're like, okay.
Because I think even at tier 3, I still deserve good governance and I deserve, you know, good practice.
You do, but you also have to appreciate the reason that those tier 3 are tier 3 is sometimes they cannot not afford some of the costs. I mean, just to get a governance consultant on your board, and how much do you need to pay a top-notch governance consultant here in Nairobi? I mean, it's quite significant. So even them, they understand they might not have the best investment mind, the best governance consultant, but they still have a purpose. And you can identify with that purpose. So I think for me, it's giving people all the information they need to work with. But of course, I agree with you. There should be some base minimums.
Yes.
There should be, and they do have. They keep saying they have liquidity ratios that you need to maintain 15% liquidity ratio. So even the smallest of the smallest still have some basics in terms of liquidity ratios. But the quality of governance management definitely improves with the budget that you have to work with.
Definitely, because you want to grow.
Yes.
But then the bottom line should be that you all
should not lose money.
Yeah, and you're all bound by the same regulations.
Yes.
The same set of regulations cut across, whether you're tier 1 or tier 3, the regulations are the same. That, you know, you're taking money and therefore this is what you shall do with that money, that you shall not do, you know, you shall not lose people's money. Bottom line. I want to conclude with, on the website of SASRA, they have a quote by their CEO, Peter Njogona, and it's about the SACCO and member relationship.
Okay.
It says, a SACCO member, in a practical sense, finds himself in a dilemma, being the owner, depositor, and the borrower. This complexity is best manifested when a SACCO is in financial distress. What do you think he meant by that, Ken?
Please repeat that.
A SACCO member is, in a practical sense, finds himself in a dilemma, being the owner, depositor, and borrower. This complexity is best manifested when a SACCO is in financial distress.
Well, it's true. For me, I think it's true. And I think it's a reflection on the trajectory that SACCOs need to take. As you said, some start with very humble beginnings.
Yep.
But if we can create a path of growth, eventually to become fully fledged commercial banks, I think you incentivize even the staff to be able to upgrade, because you say, if you guys meet ABCD, we might be able to get a license to become a bank. So there's that incentive. And for me, I think if CBK can be open to those type of conversations where new members are coming in from the SACCO community that have been centers of excellence, it propagates even downwards.
Indeed. Ken Gichinga, economist, thank you very much for joining us. Our next conversation is on matters of budget and public finance management. Our guest is the president of the Kenya National Chamber of Commerce and Industry, Dr. Eric Ruto. We'll be talking about the business barometer. The Kenya National Chamber of Commerce and Industry usually releases a business barometer looking at what's the business environment in the country in a quarter, in a half, in a year. And we will look at that and then base that on what then the industry would like to see in the next financial year in terms of budget, in terms of government expenditure, and in terms of even revenue-raising measures. Eric Ruto, our guest, coming up next. It's 8 a.m. Keep it here.